Good afternoon, this is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa with your August the 10th or week of August the 10th market summary. As we go through this crazy summer of 2012 drought related markets, let's touch on a few things. And today came out the August supply and demand and crop production numbers came out. Let's hit some highlights on these reports. First of all, as far as yield is concerned, USDA came out with 123.4 bushels an acre on corn. That compares to a month ago of 146. This gave a production number of 10.779 billion bushel, smallest crop in quite some time. Keep in mind, this is the largest drop in supply and the largest drop in demand in the history of the USDA as far as the corn is concerned. We'll touch on that more in a little bit. Soybeans, 36.1 bushels per acre with production at 2.692. Also a very big drop in production and yield, and this is going to be interesting as we go through preceding reports here in September and October. The one other thing to keep in mind, if you look at harvested acres on corn, they dropped harvested acres on corn 1.5 million acres from July. Many analysts will say due to the current situation we could see those harvested acres go down another 1.5 million to 2.5 million acres. If that's the case, that could add another 250 million decrease in production of corn without changing yield. The stocks number, or excuse me, the feed number, when you look at the supply and demand, feed demand for the August report was 4.075 billion bushels. Keep in mind that feed number, and that's feed and residual, I should be reminded, was 5.5 billion bushels back earlier this summer, so that's a huge decrease. This would be the lowest feed usage number at a little over 4 billion bushels since 1988. Exports were cut 300 million bushels. We're down to 1.3 billion bushels. That's the lowest export number since 1985, 1986. So the demand rationing and job is massive, and it's in hand and is happening. Prior to the report earlier this week, if you look at the December corn chart, we seem to be over the last 2.5–3 weeks in somewhat of a trading range between about 775 and 820 until we broke above 820 here in the last couple of days going into the report. It felt like the market was trading about 11 billion bushel crop, and the market was trying to say with an 11 billion bushel crop, $8 corn approximately is a high enough price to ration demand. So the key point from this point forward is the crop 11? Obviously we saw a little smaller number than that today. Is it 10.5, or what is that number? And the lower that production number is, the higher at some point we may need to go to ration some more of this demand. As far as on the bean numbers, as far as on the demand side, also pretty sharp drops, crushed down to 1.51 billion bushels. Exports at 1.11 billion bushels, which is kind of an interesting number because we're off to a record pace for bean exports this year, namely with China, I think, taking 62% of our total beans sales thus far. That's basically saying from this point forward we're not expected, or the USDA is not expected to see very few of any additional export sales numbers for the balance of the year. So that's going to be interesting to watch as we're not even into the crop year yet. Ending stocks at 115 million bushels. There's a good chance the USDA has a threshold on ending stocks of corn and beans that at this point they don't want to go below. Maybe that's 115 billion on the beans, maybe it's 500, 600, 650 on the corn, whatever that number may be. That's going to be key to watch. So 115 million carry out on the soybeans has a 4.2% stocks to use ratio. Now keep in mind, in the last 6 years, this is the 6 consecutive years the stocks to use ratio has been below 7%. So at 4.2%, from a stocks to use standpoint, is not much different than it's been off and on over the last 4, 5, 6 years. That's going to be kind of key as we go along also. Here's a few other highlights as far as acreage and a state-by-state breakdown looking at corn. The major Corn Belt states: Illinois, 116 bushel, that would compare to 157 a year ago. Indiana, the USDA is estimating 100 even, compared to 146 a year ago. Iowa at 141 versus 172 a year ago. Minnesota is the lone state kind of holding serve so far at 155 versus 156 a year ago. Nebraska 147 versus 160 a year ago. Then Ohio, at 126 versus 158 a year ago. South Dakota at 98 versus 132, and Wisconsin holding in pretty good at 132 versus 156 a year ago. Soybeans, the mystery crop, we won't know what we have till we get in the field. 37 in Illinois, 37 in Indiana, 43 in Iowa, 38 Minnesota, 36 Nebraska, 36 in Wisconsin, 42 in Ohio, giving an average of 36.1. I don't know if that bean acreage number is important to watch right now as the corn. The one thing to look in the balance sheet of the beans is we have very little room at all. Very little room at all from a balance sheet standpoint if we see production numbers go down. So that's going to be a key number to watch as we go along, because 115 carryout is pretty tight, and there's really not a lot of room left to ration on that beans segment. So all in all, if you're bullish going into this report, I don't think it scared you away, because the numbers were friendly enough or supportive enough to continue on the idea that we may have to ration this crop a little more, especially on the soybeans, depending on what yields come out at, and we're going to see some changes as we go along. Same way with the corn. End users are going to be buyers on breaks. I think that's going to help support downside of this market. So 2012 is going to continue to be a very interesting year. We also continue to see very inverted type markets, very little carrying charge, especially once you get past that November, December, January time frame. As you go through the new crop year, very little carries. It'll be interesting to see in the next few weeks as we get in the early part of harvest to see if we can build a little bit of carry back in these markets, namely March in the corn, maybe Jan in the soybeans, to see if we can put a little more structure back in the markets that way. But it is a market that is definitely doing its darndest to ration, and when you see inverted markets like this, rationing is key. And as long as you see converted markets with premiums in the front, as a producer is telling you it needs bushels today, not tomorrow, so keep that in mind as you're marketing your grain. But also when you see inverted markets like this, a lot of times that means we potentially have not put a high in yet, so also keep that in mind. Quickly on the livestock, fairly quiet week there. We seem to have found to some degree maybe some support, or at least some consolidation in the cattle market here over the last week or two. Keep in mind, cost of production of cattle is up almost 50 cents a pound since this rally began. Randy Block from Cattle Facts was talking earlier this week that when this rally started in mid-June, less than 20% of the cattle feeders had corn locked in for feed needs. So from an end user standpoint, that continues to be a very solid point in regards to the future of the cattle industry, the hog industry, and the poultry industry. Margins are going to be non-existent, if not very red here in the intermediate term because of these high prices. We'll have to see how that factors in to some of this rationing on the corn. Same in the livestock, same on the hog market. We're going to see some of that, and also in the poultry. So who blinks first is a little bit of the subject as far as the livestock sector is concerned. Lastly, just in summary, again, the August crop report came out today. A lot of fanfare going into this report. When it's all said and done, it was a fairly quiet day. The market seemed to absorb this information very well. And so we turn the chapter over to next week and move forward. If you have any questions, feel free to give us a call here in the office, 800-373-2525. catch us on the web at biscommodities.com. With that, have a great weekend.